And let's see where we remain in terms of where the prices are set to be going. Rebecca Babin, she's got the inside track, senior energy trader for CIBC Private Wealth Management. Always love having you on the show, Rebecca. And what do you make of the pricing pressure that we've seen oil under of late? I mean, still around about $70, but how much do you think growth is a key concern here?
So I think it's a big concern. I would say I think there's basically three things that are really driving the pressure we've seen in crude over the past couple of weeks. The first is fundamental. As you mentioned, the COVID Delta variant is causing concerns about demand, whether that's mobility restrictions in China, an uptick in cases in the US. There's a concern that the optimistic demand expectations that have been built into a lot of estimates, and that's where you're getting that $100 kind of super cycle crude bets that you're seeing across the street, are maybe a little bit too optimistic for what's happening with the Delta variant. But beyond the fundamentals, you also have a macro component that's driving the commodity. If you look at a 2-day chart of 10-year yields and crude oil, they are basically trading in lockstep. And there's been this kind of unwind of the reflation trade, which has brought some pressure on crude as well. So I think that's an important factor over this very short-term pullback that we're experiencing. And the last thing I'd mention is a technical factor. You have a huge index roll going on right now across several ETFs and indices in a low volume environment. So I think there's really three components to what's driving the action right now.
All right, so we're all looking at all those three components. For those of us who aren't in the energy space, and for investors out there in the equity space, you look at crude oil down for the last couple of days, down more than 4% here. And then you look at some of the energy stocks themselves, some of the explorers out there, they're doing well. You got Pioneer up 7.5% today, Diamondback up 5%, Phillips up 3% here. What is the divergence that's happening here? Explain that to me, Rebecca.
That's a great point, Romain. So what I would say is two things. If you're just looking at today, yes, it looks like energy equities are outperforming the commodity and there's a divergence. If you pull back a little bit to mid-June, you'll see that energy equities have actually underperformed the commodity by 10% since June 15th. So really what's happening today is you've had outstanding earnings from several major energy explorers, producers across the board, and you're seeing them kind of regain or mean revert back to closer to the way crude has performed. And I think bigger picture, as you look at energy equities, and I think what a lot of investors are asking themselves when they look at how the energy equities are responding to earnings, which are positive, but not quite as positive as you would expect, given these guys have announced buybacks, increased dividends, and remained capitally constrained, is the crude strip that we're looking at right now in the mid-60s on the screens really appropriate, because it looks like energy equities are pricing in something lower than that, kind of in the mid to high 50s. So there is a disconnect, and I think it comes down to where we see that longer term crude oil price settle. On a day-over-day basis, I think this one particular move is really just about earnings outperformance. On the big picture, I think it's going to come down to where long-term crude prices settle.
I want to talk about some of those risks. I was reading a really interesting story about jet fuel having problems getting to the actual airports because there's not enough truck drivers to transport the fuel. What are some of the secondary risks that you see to this market when you see headlines like that?
Yeah, that's a good point. My sister's a pilot, so I asked her about this, and it is true. So it's mostly a trucking issue. It's the actual ability to get the jet fuel, not actually the availability of jet fuel. It's all about the infrastructure and getting it to where it needs to be in a timely fashion. I think it's less about the overall crude market and more about regional differentials in that particular case, because there is plenty of jet fuel around. There's not a shortage on that perspective, but there is a shortage in labor, and there is a shortage in rising prices, and that ultimately can affect how companies are able to have their profitability in the near term. Though I think that'll be resolved.
And talk to us about near-term catalysts, Rebecca. And of course, we've just seen the Iranian catalyst of late, but OPEC plus, more general data points. What are you looking out for to see where the next launching off point is to the upside or downside?
Well, from a personal level, I'm watching the back to school situation and if schools are going to reopen. And we're going to have, I've seen a couple companies push back their return to work dates. And I think that's going to be a key data point to watch is, does this outbreak of the Delta variant push back the recovery in a meaningful way in terms of how we go back to work and how we travel? Secondly, I'm looking at the China import data, really important numbers, I think, seeing how impactful their recent uptick has been and how it's impacted consumption, because the US has traditionally followed them. They've been the template. So they're experiencing a major outbreak. How is gasoline consumption impacted on this, third, fourth round of an outbreak? We could probably extrapolate it to the US. I'm really watching that. And I'm watching inventory data as we come out, we're in the height of the seasonal driving season here in the US, and making sure we're buying and in a good place there.
Yeah, real quickly here, Rebecca, I'm curious about the shale producers here in the U.S. and when we get back to a stage, if at all, where we start to see them sort of push back start to increase production back to some of those pre-pandemic levels, or have we sort of entered some new era where maybe we're going to see a little bit more restraint out of the U.S. industry?
So that is the question of the century, I guess, right now. So I think, and this is, obviously hard to call, what seems to be happening is the oil majors, the larger producers, are going to keep production constrained and really in a new era, trying to transition to renewables, trying to keep their capital discipline. The private companies, though, that are picking up a lot of assets that some of these bigger companies are shedding, are going to bring back production, and they're going to do it in a pretty aggressive way. So ultimately, I think we're in a new era in that big public companies maybe don't increase production as much as they used to, but you have that second tier of companies that's private that does. Ultimately, don't necessarily think we get back to kind of that shale boom situation in the near future.